Well, of course, the Asian markets or the Asian currencies today have been jittery following that Singapore interest rate scam or Forex scam rather, and we have our markets really are waiting for what kind of penalties or what kind of regulation tightening could be happening from that area there. Let's also get in then Abhishek Goenka. He's CEO India Forex Advisors and he joins us on live as well. Abhishek, hi, welcome. I mean, apart from what's happening in Singapore, before we go to the rupee story, there's rupee trading also being launched on CME. How are you watching out for that?
I think the rupee move today is signaling the fact that the way the Japanese yen has moved internationally, rupee is taking cues from there. Internationally, we are also seeing that the Korean won and other Asian currencies are also going down. So rupee, I think because of the Japanese yen, is taking into effect and the rupee is getting weak. So we personally are still believers that the rupee on a medium to long term will still maintain its weakness because of its own problems. And the recent information that we get from the RBI is very, very clear that the current account is a concern and inflation is a concern, and they may not have very, very significant cuts in the markets coming by. So probably a quarter basis point or in CRR or a repo is in the cards, but that is not going to be very, very upbeat for the market, I guess.
Well, absolutely.
It is likely to maintain its bearish bias.
Yes, while the markets have factored in a 25 basis points, they also are hoping for a 50 basis point cut as well coming into the markets. What's your sense? What do you think the rupee is reacting on?
I think internationally, one thing you have to actually notice that there is a kind of a currency war going on. At one point of time, the European currency is going up, despite that we are seeing so much of problems in the eurozone. Recently the Draghi statement and the overall sentiment in the markets have got very hawkish. But despite that, euro going up, the rupee is still maintaining weakness in the domestic side. Now that's one thing to keep a note on. Apart from that, the government taking very strict actions on the FDI, raising import duties on gold, or raising the diesel prices are giving us an indication, which is very, very clear that rupee is having an inherent weakness, and there is that's the final step that the government is taking to protect this downgrade to happen. So I think all these indications, though at one point of time you can also look at that things are improving, at the other point you should actually look at that is a final kind of steps that the government is taking, and it's very, very difficult to actually protect the rupee for the weakness. So I think though in the market is so much of information and news that the rupee might hit towards a 52 or 51, but we personally feel that 53 should be kind of base, and the fundamentals of rupee still remains weak. So any kind of dips in the market close to 53.20 or 53.50, if we get, then definitely the importers should go long on that particular front. And I think exporters, as we always maintain, little comfortable. So 54, half 55 looks possible in the cards, so the exporters can get into the market and start booking around those levels.
Well, there also is a Fed monetary policy meeting happening this week. If it's RBI policy meeting tomorrow, and you have a budget coming in for the month of Feb as well. So looking at all these events, Abhishek, what's your sense for the rupee range for this quarter?
I think we are looking at a range of around 53 to 55 half for this particular quarter, and I think tomorrow's event is most likely to going to be a kind of a non-event tomorrow, because markets kind of priced in a quarter basis repo or a CRR. So I don't personally feel there's going to be a lot of movement. Yes, if there's going to be any movement, recently my guy was telling that the NDFs is quoting higher in the market. So after the news that we have got from the RBI, now that is something to take a note about. So in the international markets already, though a lot of international markets, NDF markets are getting rigged nowadays, but still I think the international markets give us a cue that the rupee could have a weaker opening tomorrow.
Vijay, what's your sense? How is it looking on charts? Previous week was truncated, but whatever we've seen in the markets today, and of course a bit of a jitteriness, 0.5% down, how is it reflecting on the charts for you?
Manisha, I talked about the level of 53.20 in the futures. The rupee is unable to go past that in terms of appreciation. And my guess is the scope for appreciation from here onwards in a best case scenario is 2.5%. Whereas it can actually depreciate to 55.5 in double quick time. So appreciation is likely to be very labored, whereas a decline can be really, really rapid and vicious. So the risk reward ratio does seem to indicate that short rupee and a long dollar seems to be on the cards. And if tomorrow the rate hike is not up to the market's expectations, I think in the next 3 or 4 trading sessions, the dollar is likely to appreciate vis-a-vis the rupee fairly strongly.
All right, so rupee already has factored in what RBI may have to do tomorrow. Both are experts talking rupee down. Bearishness is what you can expect in the Indian unit. Abhishek, Vijay, thank you so much for joining us with your sense on currencies. completely out of time on hot commodities. Thank you for watching.